Hi, guys. Kristen, thank you for joining us today.
Yeah, thank you so much for having me.
We are going to give everyone a chance to log in. I see everybody logging on. Thank you for everyone for joining. We're just going to give everybody a few minutes to finish logging in, and then we'll get started on the session. So, Kristen and Melanie, what are y'all going to do for Thanksgiving?
I am just taking a break. So I'm going to go visit my family over Christmas and take a longer time there. So I'm just staying here in LA and resting a bit. So
Well, that'll be nice.
Good. Yeah. Melanie, where are you going to be?
I'm going to be in Jacksonville Beach with my cousins there. And we're not cooking. We're going out to a restaurant that's on the waterfront and we're just going to hang out there. So I'm excited about it. It's going to be no fuss, no muss.
No mess. I love it.
What about you,
here.
Okay.
Dee?
We usually host. We've hosted the last 20 years, and this year, is my last year, my daughter's last year at her college, and she wants to cook Thanksgiving at her house. So we're gonna go and we're gonna let her cook. It'll be interesting.
Wow.
Right, you'll have to report back.
Yes. I'll have to share after. Well, I think everybody has had a chance to join, so I'm going to go ahead and get started. Kristen, thank you so much for joining us today. We are so excited to have you kind of teach us about the psychology of money. With that said, I'm going to go ahead and turn this over to you so that you can tell us a little bit more and provide everyone a little bit about your background.
Perfect. That sounds great. Thanks so much for having me. And this is absolutely my favorite topic to speak on. And I think it's because of just how much emotional weight is behind all of our financial decisions and money. And so thinking about how we relate to money is so important. I found it to be really just even the concepts that I'm going to talk about today have really helped guide my relationship with money and change some of my behaviors and having some awareness. So a little bit of background on myself. I started my career as a social worker and I worked primarily with homeless youth and underserved communities. I did a lot of financial education, and that's where I think my passion around the psychology of money really started. And then I built and sold a company called Cultural Outreach, focused on helping lenders reach the next generation in underserved communities. And then just recently started the nonprofit First Home IQ, where I am the executive director, and we're focused on bringing education to the next generation. So I'm going to start by sharing a little bit of some of the thinking about where we learn about money so that we can talk a little bit more about how our relationship with money is formed. So if you think about where the next generation learns about money, it's starting much earlier, and we'll talk about that later. But if you think about some of the money milestones that we're hitting, it's starting with when we're getting our first job, generally around 16. And that's when you should learn how to budget, save, and invest, but we're not learning any of that typically. And by the time you're 18, you're getting credit card offers, student loan debt offers. Still don't know how a credit score works or how debt management works. And then at 21, you're either graduating college or really starting your career. And oftentimes we have not learned anything about financial literacy. And so by the time we're buying our first home, which I just recently learned the average age of buying your first home is increased from 35 to 38. But we still haven't learned a lot about managing our money. And so it becomes this really overwhelming process where we realize we've made a ton of mistakes along the way. And we're trying to learn how to buy a home, which is extremely complicated. But we're also dealing with a lot of the challenges and taboo around money, and some of the maybe toxic, maybe just challenging relationship that we might have with money. And today, the gap between renters and owners is at a historic high, continues to rise, and yet the next generation really doesn't know about that. It doesn't know about that gap or how to achieve homeownership. So I'm going to share some of the data that I've gathered over the last few years. That is, I've surveyed over 7,000 millennial and Gen Z consumers, and just recently released a report on the psychology of money. So I'm going to talk about, and some of the data that has come up around that have shown us that the next generation really sees this, there's a gap in actually achieving homeownership. So the next generation doesn't feel that homeownership is within reach. They don't feel confident in their own knowledge about buying a home, and they are not feeling like they can trust someone else to guide them through those decisions. So when you look at all of this put together, we're feeling that homeownership is not within reach, and yet we're not confident in ourselves to make these decisions, and we're not confident in others to help us guide us through those decisions. So it becomes really challenging when we think about, how do we go into that process? Many people, including myself, who I've been very educated through this process my entire life. My dad was a mortgage broker, and I did grow up educated around financial literacy. And yet when it came time for me to buy a home, I felt all of these things. I felt like I didn't trust what other people were telling me. I didn't feel confident in my own knowledge. And I did feel that homeownership was not within reach, even though I had plenty of money saved up. And that was kind of another point where I started thinking, there's something more here. There is a deeper connection and barrier to homeownership that isn't just about the knowledge itself. It's about how I feel about my relationship with money. So, one of those distrust statistics that we found was that 2 in 3 millennials and Gen Z said they didn't think lenders were trustworthy or reliable. And I felt this so deeply. And yet I know so many people in the industry that I would absolutely trust with, with everything. And I know, and of course, I've grown up in a family that has been in this industry. And yet I still felt like I just wasn't sure that someone was going to tell me that, help me make the right decisions. I do believe that we can reverse these trends if we understand the psychology of money. And if we do that, there's a huge opportunity. Over 80 million millennial and Gen Z have not yet become homeowners and are entering the prime home buying years. And you have the opportunity to be their opportunity. I think this is a segment of the population that if we learn how to build trust, we can both build, you can build your business and also help a generation. So I want to talk about what's in your money narrative. And when we think about the psychology of money, I'm going to talk about it within this narrative around money. One is understanding your personality, your money personality. And this is really coming from a lot of the research that I did very recently on the psychology of money report. And this is looking at something that's very deeply ingrained in you, kind of a tendency. Like for me, not feeling like I was confident in myself, or that I had the education I needed, or that I could trust people. That was actually a kind of a deeply ingrained feeling that wasn't necessarily what I believed. And so, we're going to talk about some of those tendencies, and then we're going to talk about who influences your money narrative and who has influenced your money narrative. And then we'll get into actual education briefly. So when we looked at the money personality, and I built out this quiz, that's your money personality quiz, and I'll give you the link to where you can access that. But we looked at it from 3 different perspectives, or 3 different categories. One is your mindset. So that like emotional relationship you have to money, ranging from security to confidence. And then looking at the planning style. So whether you like to be, more collaborative or independent, and then your financial behaviors, and that's looking at kind of risk tolerance and spending behaviors. So we're going to start with looking at your mindset. And I would love for you guys to actually take the quiz, because it might help guide you, even though as we go through this, you might know what direction you go. The quiz also will give you results with suggestions and in supporting your money personality. And you might be surprised by how you answer some of the questions. So, and when we look at mindset, we were looking at security, meaning how secure you feel about your financial future, and confidence, meaning how much do you trust yourself in making smart financial decisions. I don't have this stat in here, but we saw a huge gender gap in this area specifically. And so, it goes to show that there's not an education gap around gender specifically, but there was a confidence gap. So I think, even if you do have the knowledge and the security, it doesn't mean you feel that way or that your mindset is that way. And so that's what we're looking at here. So when you think about mindset, do you feel secure about your financial future, or do you have a lot of anxiety about your financial future? And, one of the examples of this might be, like for me, I'm going to share a lot here, but I have always felt anxiety when I open my bank account. Like, it does not matter. At a certain point, it was making great money, and it doesn't matter how much money I'm making. I will feel anxious when I open my bank account or when I think about managing my finances. And so for me, having that knowledge, I am now able to say, okay, this isn't actually a scary thing. It's just my tendency. It's part of my, like one of the challenges that I'm experiencing. So I can say, how can I make myself feel a little bit less anxious? I'm going to put myself in I'm going to have to put in my calendar times that I'm checking in with my finances and I'm managing my finances. And I'm going to have to take deep breaths and maybe have a cup of tea and just acknowledge, like, okay, that anxiety is going to be there, but it doesn't mean that anything is wrong. And I think, that's an example of how, if we have an understanding of our money personality or our psychology around this and relationship with money, that we can make changes, positive changes to our financial behaviors. So whenever we are going through, at First Home IQ, we teach financial literacy to the next generation. And this conversation is the first one we have in our curriculum, because if we understand and have some awareness, then we can make changes to our education. So secondly, in your mindset, thinking about confidence levels, are you feeling confident in your ability to make financial decisions, or are you overly cautious? And this might lean into some of the anxiety as well. This is the one that was most significant between men and women, was that confidence level, which probably won't surprise you, but just, then acknowledging, okay, are you overly confident? If you're really far on that spectrum, then you might want to just be aware of that so that you can, tailor your planning around that. And of course, we fall on a spectrum. I'm not going to, I'll show these at the end of each section, but I won't go into it too much. But I just want you to see that we can look at this in a matrix, and you might be really high confidence and really high security, or you might be closer to the middle on any number of these areas. So, this is just to show you what the results were in the actual research. So we put together this quiz and then had, I think it was 500 people take the quiz itself, and from a variety of backgrounds, and we found it to be pretty even. We did find a higher amount of people that were low on the financial security piece, but what I found most interesting was that there was not a difference in age groups. So we looked at young millennials, older millennials, Gen X, boomers, and it didn't change. So I think that kind of shows this is really a personality trait. Okay, so the second category was around financial planning, and that's looking at how analytical you are and how dependent you are on others. So starting with the dependence piece, do you tend to be more collaborative or independent? And that would be thinking about, whenever you're making big financial decisions, do you want other voices at the table? I am very collaborative. I want to ultimately make that decision for myself, but I'm going to want other people to weigh in. And I've become less, more on the independent scale. I think most people do as they get a little bit older, but it's helpful for me to hear from others, how what their expertise is. And some people want to just be able to think about, not hear from anyone else and just think about it for themselves. But this is helpful when you think about, like, if you're a collaborative type, you might want to make sure that you have a collaborative financial planner. When I was interviewing financial planners, there was someone who, there was someone that he was showing me a lot of information that helped me make decisions for myself, but it felt collaborative. And that's the person that I knew this is going to be a great fit for me. There's going to be other people that want more of a hands-off kind of person. And that would be more beneficial for an independent type of planner. And then we have, how analytical are you? So detail oriented, or what I very nicely call free spirited, because this is one of the categories that I thought was really important, because with a lot of our financial literacy education and mortgage education, it is often geared towards the detail oriented person that is that's the person that wants to know where every dollar goes, and super detail oriented. But what we've found is that there's an equal amount of people who are not going to be able to do that, and in life they're not as analytical, and so they want to maybe have more of like a bucket structure to their budget, or be able to look at things a little bit differently. And if we just educate this portion of the population, then this other one is going to feel that they're not able to get there. So again, looking at this equally, like there's a good amount of people who are, I guess in this case, there's 60% of the people who are not high on the analytical thinking scale. So at least a third of them are very low on that scale. The last dimension is looking at your behavior. So that's spending impulsivity or risk tolerance. So are you more risk averse or risk tolerant? Do you tend to feel more comfortable taking those, riskier investments, or leveraging debt, things like that? And then on the spending side, are you more of a spender or a saver? And this doesn't need to be a bad thing. When you say spender, it sounds bad, but as I ask questions in the quiz around spending impulsivity, and it's more about understanding what's your tendency. Like if you're really tired, I'm speaking for myself, if I'm really tired, I know that I really shouldn't scroll on Instagram, because those ads are just going to get me. They know me so well, and I'm going to feel good by spending. There are people who are going to feel good by saving, and they tend to kind of like pull in. And at an extreme on either side, it's going to be challenging. But if you can understand, okay, this is the way that I am, you can put up safeguards to support yourself and help you make smarter decisions. But I think as much as we can take some of the shame away from where we fall on these spectrums, the more that we're going to be able to make smart decisions for ourselves. So we did see a higher population that were low on spending impulsivity and low on risk tolerance, but you can see that there's still a large population that fits in each one of these categories. So you can go take this quiz at firsthomeiq.com/money-personality, and you'll get a lot of information following. It's definitely something that I would encourage, and it was developed as a way to share with your clients, share with your in your community. It's a great leadership piece for you to be able to talk with others about, bringing awareness to your money personality. And you can, at the end, again, it will give you like suggestions based on if you're low, medium, or high in any number of those categories to support you in your financial decision making. So the next category, and I'll just kind of briefly go through these, and then totally open to your questions. And if we don't have enough time, happy to follow up with you on those. But I'll just briefly touch on these so that we can have a few minutes at the end. So the second area of your money narrative is influence. And so who is influencing your money narrative, and where did you get your messages around money? So one of the things that I think is really fascinating is that our money habits are actually ingrained at a really young age. This study showed by 7 years old. I've seen a PBS study that showed by 3 years old. So it happens at a young age. And if you think about, a lot of our relationship to the world is ingrained in us at a very young age. So of course it's going to be the same when it comes to money. And why is that? It's because as young children, we are sponges, and we are imitating every behavior that we see of our parents or caregivers. We are also absorbing their emotions and attitudes, and that's going to be the case around money. Even if they weren't saying anything around money, you weren't watching them, managing the bills at the end of the month or anything like that, you're still absorbing their emotions around it. And so you're going to watch your parents talk about or whether they make a purchase, or whether they go to dinner, or whether your family goes to dinner. And so you're going to be absorbing that, but they're also going to be imitating that. And then you're going to see specific experiences. A parent loses a job, or you're going to, see arguments happen around money, or watching them go through some kind of financial crisis. Those are more negative, but it could also be a raise. I was, of course, part of a mortgage family, so I had lots of ups and downs in the mortgage business. And I remember some of those, but I know I was absorbing a lot of those. So here's just a list of questions that typically I'd run through with you guys, but I think it would be, if you want to screenshot this and take this with you to have a conversation with your family, or share this kind of stuff in a presentation with realtor partners or on social media. These are just great questions that can kind of drill into understanding your money story. Thinking about, what's the earliest memory you have about money? Like, was it having a lemonade stand? Was it getting an allowance? Was it some kind of, money challenge? Like parents struggling with money. But what were those conversations like? And then lastly, if you think about what goes into your money narrative, education is going to be a key part of that, and is constantly changing. So we talked about where people are learning about that kind of, or where we should be learning, and where we are learning some things along the way, those money milestones. We would hope that we're learning how to budget when we get a job. We'd hope we understand how our credit score works when we get a credit card. But oftentimes we're not. And so there's a big gap around that. And again, a really big opportunity. We did a quiz a year ago that we've been using as part of our education with First Home IQ that measures your understanding of buying your first home. So if you are interested in taking another quiz, you can take that quiz at firsthomeiq.com/Kristen. But the average score of that quiz, 15 questions, that measures your understanding of buying your first home. Average score is 57%. Regardless of age, it is not great when you think about, basic questions about buying your first home. So we know that there's a low education here. Oh, and if you do take this quiz, we will send you one of our free presentations if you're interested in accessing that. So you can just go through that quiz and we'll email that to you. So, part of the way that I believe we can reverse these trends and bring better education and build trust and relationship is through delivering homeownership education, inspiration, and resources to the next generation, which is our mission at First Home IQ. So we have developed free online courses. We've built out presentation materials, quiz materials, activities, a free teacher portal, things that will help to guide people along those money milestones. Our approach is to provide free education to educators. We have a full curriculum with resources for schools and teachers to be able to implement financial literacy education. We work with parents and family members and have resources to help them teach their kids about homeownership and financial literacy. We're creating media content and great videos and online courses. And then we are also coming together as an industry to be able to power those free resources through the financial support, and also by delivering for the industry, helping them reach first-time home buyers by building trust, by delivering education. So at this point, we have educated over 1,000 students. We started just about a year ago and have partnered with schools and nonprofits to be able to bring that education. We have ambassadors as part of our ambassador program who are going into schools and volunteering to deliver that education. And at this point, we have actually about 150 ambassadors who are leaders and in over 120 communities across the country. So if you are interested in learning more about the program, you can go to our website and access more information. We have presentation materials, presentation kits with sign-in sheets, social media graphics, and then we also provide support and community leadership through social media content, video materials, and custom video editing and scripting, community leadership and strategy calls, including masterclasses by people like Tim Brahim. And we have a custom First Home IQ quiz for anyone who participates in the ambassador program. So anyone that has that quiz and delivers that quiz, you get emailed their name, email, and results. So it's a way to build database and has been a great tool for delivering education and also building connections. Okay, so that was a kind of quick run through, but if you're interested in learning more about that, you can go to firsthomeiq.com/ambassador and just explore any of our free resources around there or our ambassador program. But overall, the goal of this conversation is to just understand what goes into your money narrative, and including childhood experiences, your support system or influences, and education. So thank you so much, everyone, for attending. Thank you, Mimi, for having me. And if there are any questions, I'm happy to answer those.
Yeah, thank you, Kristen. That was very informative. And I think it's wonderful what you guys are doing in bringing education, to the masses when regarding financial literacy. Does anybody else have any questions that you would like to ask at this time? You must have done a really good job and very thorough.
Well, thank you so much.
Yeah, thank you, Kristen. And thank you everyone for joining today. We'll be sharing a copy of the presentation as well as a recording with everyone after the session. If you have any questions, please reach out. Be happy to connect you with Kristen for more information. Thanks and have a great day, everybody. Thanks, Kristen.